Hello everyone, this is Meina, your crypto friend. In this week's edition of CryptoMeinaxBitpush Weekly Web3 News, I will discuss Aptos reaching a record high, ongoing layoffs in Web3, and recent updates from FTX. Tune in for the latest updates on these developments in crypto. In the past week, the crypto market trended steadily. Bitcoin and Ethereum consolidated, and APT, the native token of Layer 1 blockchain Aptos, rose strongly and repeatedly broke new highs. As of January 28th, the trading price of APT was 18.35, an increase of more than 400% in 30 days. Aptos TVL exceeded 58 million, which also hit a record high. PancakeSwap, which achieved multi-chain deployment for the first time, accounted for 58% of Aptos TVL. Aptos has been controversial since its launch last year due to its token economics, token distribution mechanism, and transaction per second that are below expected. I have also invited Alpha, the co-founder of Poolshark Protocol, to comment on Aptos.
Coming from a developer's perspective, I've taken a brief look at the language, and it didn't seem like something that was super interesting to me. Basically, any smart contract platform that you're looking at, you ultimately run into the same sort of problems where, okay, you have to broadcast some information. And so I think the sorts of applications that you're going to see on most blockchains, unless they have a dramatically different approach to how the information is propagated, like something like Solana, I think ultimately you're going to see like the same kinds of applications exist on these different platforms. So like from a builder standpoint, I don't really see like what Aptos brings to the field that's any different. Like I'm not really seeing anything new there. Ultimately, it could just be like a sort of like trading momentum thing where, the price of Aptos started to move for one reason or another, was in the news, and people just kind of like continue to push that momentum.
But they do have a lot of developers right now within their ecosystem based on the electric capitals, like developers report they just published like 10 days ago.
Yeah, that like if they put out a report that was bullish for them in terms of their developer ecosystem, that might have been something that people were chasing after and trying to squeeze the price improvements out of that.
Oh, I see. Yeah. So basically, you're saying this is Wells trading, basically, or FOMOing in that sense.
Perhaps. I think there's a lot of information that probably is not known to the market. So maybe there was some information there that wasn't known to the market. It became known, and then people started to act on that and sort of, change the way that they saw Aptos in terms of valuation.
I wanted to just briefly cover on the price that it's many experts and me personally, I believe that this price increase was a short-term increase because of a few technical metrics. So there was an order book where the bid wall actually didn't face any resistance, and that resolved in an increase for Aptos price. At the same time, there was Aptos World Tour announced, so it also drive a little bit more attention to this project. However, everyone seems to forget about fundamentals behind Aptos. And while the price is increasing, what I noticed and that is really, really interesting is that their developers' churn ratio is actually increasing. So that means every month there are less developers joining Aptos ecosystem, and there are more developers leaving the Aptos ecosystem. As we know right now, most of major blockchain protocols are, I would say, in a war for developers. Are they all trying to attract more talented builders to their ecosystem? And in the case with Aptos, there were a lot of discussions that because of our Move language, there will be more developers, potentially more developers moving from Solana ecosystem, because Move language is easier to develop on. There are more opportunities in the new ecosystem for developers from Solana blockchain. However, at the same time, we see that there is actual churn rate, and that's for me a very interesting aspect to pay attention to, because developers obviously are those who know more details about protocol. And to cover a little bit on Aptos in general, in my opinion, I'm a big advocate for decentralization. And even though most of protocols are completely centralized, I still prefer ecosystems that are at least working towards decentralization. And Aptos, for me, raising a lot of red flags with lack of transparency in their tokenomics, in a heavy centralization of their ecosystem. So it raises a lot of question marks for me.
So what would you recommend for daily users? I mean, of course, we are not trying to speculate the price action or anything like that.
Ultimately, users are going to go where they're kind of treated best and they get the things that they want, whether that's things that are truly decentralized, or they sort of want the blockchain-like experience, but they want it at a lower cost. It just depends on what the ultimate interests of the users are. In terms, like from a security standpoint, like people are definitely preferring Ethereum. Like I think that's why people ultimately come to a blockchain, like bring their capital to a blockchain, is for the security and the uptime. And I think you're still seeing Ethereum eat up a ton of the market share because that's kind of the dominant reason. It's not 100% focused on scalability. So I think the benefits to the user are mostly from a security standpoint. So I think you're going to continue to see that kind of be the focus.
The wave of layoffs in the crypto industry has not yet subsided, with several high-profile companies announcing layoffs last week. Cryptocurrency exchange Luno, which is owned by DCG, cut 35% of its staff, and Gemini cut 10%, the company's third round of layoffs since June. Jihan Wu-owned crypto service provider Matrixport cut its staff by 10%, and crypto tax unicorn cut its staff by 20%. The FTX bankruptcy case continues to make progress. Last week, a new list of FTX creditors was announced, including tech giants such as Amazon Web Services, Apple, Meta, sports stars such as Tom Brady, and local governments in the United States. Prosecutors seized nearly $50 million from SBF's Farmington State Bank account. Alameda bought the bank's stock last year for $11.5 million, more than double the bank's entire net worth at the time. Thank you for watching. See you next time. Bye.